Okay, before I start off the session, let me just clarify something real quick in case it was misunderstood earlier. In some of the previous videos, I might have referred to tactics as being what happens after the market is open, but in reality, the trade plan that we've just come up with through that 6-step process is the foundation of the tactics. You see, the strategy, like we said earlier, is your overall source of edge or your view of how to make money in the markets. And our day trading strategy can be simplified or summed down to basically getting on board trend days and fading key reference areas on non-trend days. That's in its broadest sense, right? But tactics are what take a strategy and apply it to a custom situation. And the custom situation is any specific day that you're about to trade. So when we have that trade plan that has various scenarios and all that, those are the tactics. And now what we're getting it into in this session, which is when the market opens, those are also part of the tactics that complement the work that you do before the market opens. Okay? And they all still fit under the same general strategy. You're just trying to see how to implement that strategy on this specific day. Now, getting into this session, we've done our planning, we have our trade plan set out, we have our scenarios. What do we do when the market opens? How do we gauge market action to implement our strategy correctly? Well, really, we can also simplify this to come down to day type, which is what we were doing earlier. See, earlier when we were doing a trade plan, we were trying to decide, are the odds good for a trending day? Are they not? Again, the majority of the time they're not going to be, because the majority of the time we don't see a trend day. As we saw in earlier stats in the foundational sessions, pure trend days only happen about 2% of the time, and then other forms of trend days maybe 5 to 7% of the time. So it's still, less than 10% of the time that you're getting the trend day. But they're so important in terms of their profit potential or in terms of how much losses they can give you if you don't recognize them, that's why we pay that much attention to them. But so you have to recognize that most days you're not going to have trends, and most of the times there's not going to be enough conditions lined up to even give warrant thinking that there would be a trend day. But what you do though is that if there are the conditions lined up at the open, you got to see, okay, just because those conditions are lined up, it doesn't mean that this particular day is actually going to trend. It might happen tomorrow or the next day or whatever. So you got to see after the open, are we getting confirmation that it could be today? It's also about timing, right? And if you don't have potential trend day conditions, you'll also benefit from being able to read the market after the open to basically tell you what the likely bias is and which side to weigh more heavily, the short side or the long side in your trading, and we'll get into that later. But for now, what you got to realize is that if you know what to look for that confirm a potential trend day, then the opposite of those things, or the lack of them, basically show you that you're more likely going to have more of a balancing or non-trend day. So really, you only need to understand what to look for to confirm a potential important directional move. And if it's not there, if those things are lacking, then by default, you already know you're going to be switching to the other part of the strategy, which is just to fade the key reference areas. So that's what's cool about this. Now, to make it easier for you, we've come up with some rules of thumb or some guidelines just to guide you. You have them in your mind as a background, as a kind of a checklist at the beginning of the day, when the market opens in the first half hour or so. And they just help structure things and they help keep you on the right side of the market. So let's detail the points, and there are basically three major ones we have for you. The first is what's called open drive behavior, and we'll get into exactly what that means. The second is a tight early balance, and we'll also get into that. And the third is supporting market internals, and this one is only specific for the equity indices. So if you trade the S&P or the Nasdaq, the Dow or the Russell. The other two are for any market. Okay, so let's get into the charts and check them out. So what we're going to do is carry on with the live market example that we were using when building our 6-step process, our trading plan. And this will actually allow you to understand things better, put them in context, and just keep following along in a real example. Okay? Now, if you remember, we were saying that in this specific market context, the odds of getting a trend day soon were actually quite high. All right? We had the balance area that was mature, we had some potential market moving news, and we had a pretty decent sized gap. So things were looking good for a trend. Now, unfortunately, what ended up happening here was that we had Hurricane Sandy. As I was recording the first sessions all about the trade plan, I was recording them live as the market was playing out, and there was a couple hours left before the open on Monday. And then it turned out that there was going to be no open because of Hurricane Sandy. So Monday we actually got no trading. See, it's an empty day. Nothing happened here. And then also Tuesday we ended up getting no trading. All right. So everything got delayed. It was an unfortunate event for all the people on the East Coast. And the market had this rare thing of having 2 days with no trading at all. But, of course, the market ends up opening again, and the analysis basically remains valid. So the live analysis we were doing now just had to wait a couple days, and we'll pick it up on the Wednesday. Okay? And by that time, as you see here, which is the initial action in the morning, by that time, if you remember on Monday, we thought we were going to be opening up down here. By that time, these lows held, the support held yet again, the bottom of the balance area held yet again, and by the time Wednesday rolled out, we were actually opening way up here. All right. Now again, same thing. The potential for trend was still there. Okay. We were opening the gap. We were opening away from the major value of this previous balance area, and it was a mature balance area altogether. So the potential for trending was there, and there was a good chance that it could break out to the upside in the direction of the bigger picture. But there's one thing to remember. If you remember our economic calendar when we were looking at it, there was some major reports due out on Thursday and Friday. And now, since we had lost these 2 days of trading, we were on this Wednesday right before these major reports. So that basically, as you know, makes the odds of a directional conviction move lower. And it really told us that despite there being a mature balance and now a gap, the market may end up waiting for Thursday or Friday to come along for those big reports to come out. The institutions would maybe stay on the sidelines and then commit to a directional move when they came out. Now, it's never sure. You never know. I mean, the move could have happened this day, so you always have to be paying attention at the open to see. Okay? And the first thing we're looking for, like we said, is, well, is there any strong open drive behavior? And what open drive behavior means is that you open, and it doesn't have to be right away, but within the first few minutes, let's say, you take off to one side or the other in a strong directional conviction move. Now, why that's important is that that basically tells you that there's some real conviction in the market. The institutions are the ones that are usually most active in the morning. And if the market opens and just takes off in one direction, that means their perception of value from what it was before had changed, and they're committing to a direction early on. So it's just a heads up that the big players have conviction in one direction or the other, and that increases the odds of getting a trend day greatly, especially, of course, with the context already supporting it. Okay? Now, as we look here, well, there wasn't any real thrust. It was open, go up and down all the way from 13 to 11, back up all the way down to 09, back up to 14 and a half, back down to 11. So it was kind of all over the place. And it was showing that there was no real open drive conviction one way or the other. So that's our first heads up that maybe we're not going to see the trend day to day. Maybe it's going to be a different type of day. So let's see a little more what happened next. So now we see as the day continued, it just kind of went down to 1409, back up to almost 1412. And now we're noticing, okay, not only is there no open drive, but it doesn't seem like there's a tight balance either forming in the morning, so far at least. So just the feel we were getting here on this Wednesday is that it was neither an open drive nor a really tight range. And so what ended up happening, it basically tanked down, which is a strong move, right? It is a strong move. And someone could say, well, couldn't this be like a trending move? Well, again, you got to look at the context. There wasn't very strong directional conviction right in the morning. And this is a 5-minute chart. So within the first, more than half an hour or so, we were still right here at close to where we opened. That's one. Two, we know that there's some major announcements coming up. And three, we hadn't really broken out to the top, above the top of the major balance area. So for all intents and purposes, even though we had gapped up, we were still within the bigger picture balance area. All right, we hadn't tried to break above it and failed, which would make the potential for a downtrend more. We were still within it. So all these things were telling us that when you combine them with these early lack of signs for potential trend, that whatever was going to happen now is probably not going to be sustained to the downside. And as we see what happened, we basically ended up having a normal variation day where we had a strong move down, but then reversed about 60-70% of it to the way back up, and then tanked down at the end of the day again. So the high of the day came within the first half an hour, and we ended up extending the range to the downside, which is what a normal variation day is. But it wasn't a trend day, and overall, what happened, I'm just zoomed out, what happened is that we just stayed in this whole overall balance, right? We couldn't break it to the upside, we couldn't break it to the downside, and we stayed within it. And these were the 2 holiday days. That's why this space is empty. Okay? So the behavior at the open, the lack of conviction and lack of tight balance, combined with the context of, the major news coming out the day after, and the fact that we hadn't really tried to test above it and failed, all of that told us, okay, today's probably not going to be a trend day. Doesn't mean you're not going to have directional move within it, right? And we'll get into that later about how to decide which key reference areas to fade or not based on how strong there's some directional move within the day. But it was telling us that it was likely not going to be the trend day we were looking for, and that would sustain itself in one direction without reversing back. Okay? So let's zoom back in now and see what happened on the next day. Okay, so this was the end of this day. Now, going in to the next day, you would be doing what? Well, you would be going through the same 6-step process again, all right? You would now be adding this piece of information, and now you're starting about to trade the next day, so your routine in the morning would be to look at the bigger context. So of course, that hasn't really changed. So that's quick. Okay, all that's happened is this day left you inside of the bigger balance. So everything's pretty much the same still. That won't take you long. The only thing that'll really be changing at this point is you drawing in the new reference areas. I'm not going to do that again here, but suffice it to say that now the lows of this day would be important, which was also kind of a tale in itself here. This close would be important, and the highs of the day would be important. All right, these 3 lines that were the high of this and this now would be gone. They would be invalidated, right? They would be irrelevant. And we'd have a new point. But again, the odds of trend now would be quite high. because now we have an even more mature balance. Now it's 5 days. That includes this. And now today's Thursday, and we have the market moving news coming out. So that's important. And as we'll see, we're opening up with a gap right about here. So that's important. After we had closed down all the way here, we're opening up with a decent sized gap. So again, all the stars are lined up for a potential trending move. So what do? We gauge the action at the open to see if that's going to confirm it. Okay, to see if, unlike last time, we're going to get some of these conditions. So let's see what happened here. Well, look at this. This is the first 5-minute bar. Now, what do you notice about this first 5-minute bar that's different than what happened here? The first thing you should notice is that it was an open drive bar. It opened at 10. Yes, when you're watching it live, you're going to see it opened at 10 and came down to 09. So what I said is the first few minutes, it doesn't have to be instant open and drive. And sometimes it is, but it doesn't have to be instant. But by the end of this 5-minute bar, you've seen it just took off with conviction, right? There was a difference between this all over the place and this. This is 4.5 points from 09 to 13.5 straight up. All right, then what ended up happening? Then we had a little consolidation bar. Okay, then we sold off. But let's see what happened when we sold off. Quickly, this bar gets reversed and back up to 14. See, if we had sold off and like here, just kind of reversed this whole thing, then that would kind of have invalidated the open drive. But again, we see right when it sold off quickly, it's back up. And then, boom, it shoots right back up. So early in this day, it's quickly telling you there's some directional conviction. Now, based on all the context, right, and based on the fact that there's a mature balance and there's the news and there's the important news on this day, and there's the major gap. It closed all the way here but was opening here. You didn't even have to wait for this, right? With experience, you'll notice that once you see this big initial thrust up to 13, you want to be getting on board quickly, and we'll get into in the execution how to do that. But this was telling you that you were very likely to see a trending move, and this was telling you here as it started going higher that very likely you were going to see a trending day higher, and we were going to break out outside of this top of this balance. And in this instance, that's exactly what ended up happening. We shot up more, straight all the way to 19, and by the end of the day, we had gone up all the way to 1425 and closed pretty much at the highs. Now this particular day, even though it opened on one end, closed at one end, which is the typical definition of a trend day, it had this major balance within the day. So it wasn't as smooth as some of the days, but still fits the definition. We never ended up reversing it. We closed near the high, and if you were able to get in long somewhere here, this was a great trade. Okay, but the heads up was that quick open drive. Now, what about our other points? Even though we're looking at the S&P 500, the ES futures, I've explained all this in a sense that it can be applied to pretty much any market. Okay, you can use this analysis for any market, and it's equally applicable. Now, the good thing about trading the equity indices like the S&P or the Nasdaq, Dow, or Russell is that you have extra information to look at that can even help you gauge the likelihood of a trend day early on. And those, like we had discussed extensively in the foundation training about the market framework, are market internals. Okay, so if you do trade the S&P or the other equity indices, then you have a couple other things to look at to give you heads up what kind of day we're likely to have early on to confirm or negate the potential of a trend day forming. So let's take a look at first the NYSE tick and then the advanced decline line on both these days to see what they were showing. Okay, what I've done now is I've zoomed it into a 1-minute chart and I've overlaid the NYSE tick on the bottom of this chart. And this is Wednesday, right after those 2 days that there was no trading. Okay, and let's just quickly take a look at what the NYSE tick was doing. And by the way, just for you to know, when the market opens, you can choose to look at any time frame you want. Okay, you can use 1 minute charts, you can use 5 minute charts. In general, in our own trading, we use 1 minute charts just to show the greatest detail possible. Later, when you're looking at specific entries, 1 minute charts are helpful. But, there's no specific thing. You can use 2 minute charts, whatever you really want. All right, and so again, this was Wednesday, and as we see, we had gone up, rejected it back down, shot right back up, shot right back down, in about a 5.5 point range here at the open. And what was the NYC tick doing? Well, it was basically all over the place. It was neutral. In the beginning minutes, it was, between plus 200, minus 200. Then it shot up to about plus 500 on the rise. When it came down, it shot down to minus 400. So not only was it balanced above and below the zero line, which, like we had explained before, that just shows neutrality, but there was no extremes either one way or the other. The most we got was minus 400 plus 500. So this was quickly showing you that there was no conviction that day. There was no real bias early on. Within the first hour or so, there was just nothing there. Again, showing you that the potential for trend wasn't there. Now let's contrast that with Thursday, okay? And as you see, even in this day, even as this whole move came down, the most we got down to was minus 500, which is not extreme at all. So this was showing that this was not such a strong move, even though in price terms it looked like it could potentially be a trend. The tick was showing you that this was not likely to be sustained too much, and which is why it ended up having this big reversal after the midday. Now let's look at Thursday, that first open drive. Now, if you notice, the NYC tick only reached plus 600, which again isn't huge. But what do you notice here? Look at this. It had pretty much no negative readings. It stayed above zero. And even as we moved down initially here, let's look at that. You see this drop from in the morning from 1375 down to 1150 or 1125. Decent sized drop for the morning. What did the tick do? It literally stayed above zero. On Wednesday it was plus 400, minus 400, plus 200, minus 200. Here, even though we weren't reaching major extremes in itself, the other thing we had taught in the foundation level, and if you should go back and review the part all about the internals, the 3 videos about internals, review them if you've forgotten this, but the tilt was way above zero here. It was holding. This was a beautiful entry, as you'll later see, to get long. Not only was it open drive, it was showing you that when the market was selling off, this thing was holding above zero, which was showing that the buying pressure was very strong and the selling pressure was quickly being absorbed. And so what ended up happening the rest of the day, look at this. I mean, we're talking the majority of the day until here, until this thing, the first hour and a half or so, the most we got was minus 100. Look at this tilt. And up here, we're getting to close to plus 800. That's just typical trend day behavior, like we had discussed earlier. But you didn't need to see all this and wait that long to get on board this thing. Within the first half an hour, it was already confirming the open drive nature because of this, okay? And then, the rest of the day ended up kind of becoming more neutral around the zero line. We even got a minus 700, and this tilt became more neutral. Here's the zero line, it was just the same up and below it. And why? What happened? Well, we were balancing the rest of this day. We didn't give it up, we didn't reverse it, but as long as we were balancing, there was no more longer that tilt, okay? Until the end of the day, of course, when we shot back up and closed near the high and we saw this plus 800. So, but in general, early on, it was already telling you that's what the odds were. And on Wednesday, it was already telling you you're not likely to see a trend day, okay? And now finally, let's quickly look at the advanced decline line to see what that was telling us. Okay, I've replaced the NYC tick with the NYSE advanced decline line at the bottom. And as we see on this day, it was just pretty much all over the place in line with the market. It was positive because we had gapped up, all right, so that's normal. But there was no trend to the NYSE advanced line. There was no real extremes being reached early on within this first initial period. Now let's contrast that to Thursday. Well, look at Thursday. Okay, let's look at this. Market opens, drives, and what does the advanced decline line do? Just like the previous day, it had opened around the same area, plus 400, but look at this. It shoots up instantly to plus 1200. Okay, it just takes off to plus 1200, whereas the other day it only reached plus 600 and just instantly snapped back down. Now, what happens when we sell off here? Let's look. Okay, so we did have this 3-point sell-off, but what happened here? Well, it was sticking around. It barely budged down. Again, what was that showing us? Great buying opportunity, showing us a lot of internal strength in the market. Okay, and what ended up happening is that, it just kept trending higher and higher and hit plus 1800 here, and it was a very strong day. Okay, whereas here, the previous day, despite us having the same absolute number of points up, which was what, 4 points in the morning, what happened? It only went from plus 400 to plus 650 on this 4-point rise. Whereas on this 4-point rise, it went from 400 to plus 1200 and then barely dropped as we dropped here. Before, when we dropped, it just gave it all back. Again, good indications that you're likely to have a trending move. And so I hope now you've seen how to read the market at the open. There will be nuances. It's not always going to be straightforward. You're going to have to learn with experience. The best way to do that is to sit there with historical charts and review day after day and see what the market did, but remember to also put it in context. It's not in isolation. But as you see, if you do trade the index futures, you do get extra information from the tick and the advanced decline line. They're going to quickly confirm that open drive, and that's basically going to tell you if all that pre-market prep you did is now confirming after the market open. And just as a last final note, if we did get that tight initial balance, right, then what you're doing is you're waiting to see, is there a strong breakout to the one side or the other of it? That's the simple thing you're doing. Is there a strong breakout to one side or the other? And the strong breakout, then you just analyze it like you did this initial open drive, except it's going to be out of an initial balance. So, same principles. And so I hope you now have a better understanding of how to apply tactics when the market's open to better implement your trading plan.